Hello and welcome to today's payroll question time. I'm just going to leave a couple of moments to make sure everyone can get online. I can see the attendee numbers going up exponentially there. So while we wait everyone to get ready, welcome. What a couple of weeks it's been. Well, Liz Truss has come in and Liz Truss has left again. Kwasi Kwarteng has come in and Kwasi Kwarteng has left again. The mini budget and growth plan that we spent so much time discussing at last month's PQT, well, most of that's all been scrapped. So who knows, by the time the next PQT comes around, we'll have Boris back in charge. No comments required. Meanwhile, for those I'm sure you're all familiar, we have a new Chancellor, Jeremy Hunt, who's made so many U-turns, all of which we're going to be discussing in today's episode of PQT. Jeremy Hunt has reversed most of the mini budget measures ahead of his medium-term fiscal event on the 31st of October. So I'm sure the next PQT is going to be equally interesting as well. Changes that are announced are estimated to be at a cost to the taxpayer worth 32 billion a year. So today we're going to find out exactly what is in and what is out. So stay tuned, because today's PQT is not going to be too dissimilar to the hokey cokey. So as we do discover what's in, out, in, out, in, out, I want everyone today to send us all of your burning questions so we can really shake out our expert panel. We can find out all the answers to your questions. And of course, you can start putting your questions in the chat box straight away. And I will start asking our expert panel today those as we go through the show. Now, before I introduce you to today's fantastic panel, we have a new member as well. I'm going to quickly run through a little bit of housekeeping. So number one, questions I've just mentioned. We have selected in advance a few questions as well, suitable for the defined topics. But if you have anything today that you want us to ask, put them in the chat box, and I will do my very best to ask them as we go through. There are going to be 3 polls today, and we want to hear your thoughts and your opinions. So please do make sure you're ready for those. Give us your best responses, and we'll do our best to comment on the results as well. We are, of course, recording this session. We will, however, send you the slides after the recording, so you don't need to make notes. If you've signed up, you'll get a copy of that at the end of the show. And along with the recording will also be a survey. And we're going to send you the survey because we want to find out, A, what you think about PQT, but more importantly, what you want us to cover in next month's edition. So please do give us your feedback, and we'll try and cover all of those burning subject areas you want us to discuss in a future show. Now, last but not least, I'm going to read out our legal disclaimer, which says the presentation does not provide definitive answers to individual queries, and in some places does take views on matters which are uncertain. It is not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. Now, for those of you who don't know me, my name is Nick Day. I'm the founder of JGA Payroll Recruitment. I'm a Reward 300 member and have been, I think, for the last 4 years now. I'm very, very passionate about payroll. I even have my own podcast called the Payroll Podcast, dedicated entirely to the world of payroll, of which you will find these previous recordings as well if you want to find out more about what you've missed in PQT time gone by. But enough about me. Let me introduce you to our fantastic panel. I'm going to introduce you to someone I know very well. In fact, I've cycled with him throughout Europe. His name is Richard George. He's Director of Education at the Payroll Centre. Richard, introduce yourself if you can.
Yeah, thanks, Nick, and hello, everybody, and welcome to today's political broadcast on behalf of the Payroll organisation. I think it's going to be a very challenging one. So my name is Richard George, as Nick quite rightly said. I've been involved in the payroll industry now for 36 years. So I took my first payroll job when I was 4. Because there's no way in the world I'm any older than that. So I run all education, thought leadership and output from the Payroll Centre. So we're the UK's largest face-to-face training company in the payroll industry. And we therefore obviously see thousands of you every single year. And that gives us a very good, I guess, start point of understanding where the profession is. Like Nick, passionate about payroll. It's all I've ever done. And really looking forward to today.
Fantastic. And our next panel industry heavyweight, Simon Parsons.
Yeah, good afternoon, everyone. It's good to be back with you again. Great to see. It's nice to go through a nice static period, isn't it, of not much happening around in the world, which I don't think we've seen in payroll for at least 3 years. So my background, I've been involved in IT payroll development since 1984. Can you believe it? What's that, 38 years? On and off for various organisations, but with SD Worx now for the past 25.5 years. So on this stint, been with them before as well. I'm also, like Nick, Richard, are you part of payroll, the reward 300 as well? I think you
Absolutely,
probably are.
I'd have worn my badge if I'd have thought about it. So
Yes, yeah, we'll all got our little pin. So we're all members of the reward 300, have been for some time, and it's great to be with you. We'll predict the next Prime Minister, will we?
Yeah,
absolutely.
We'll take odds. Well, I'm delighted to say we've already had some questions coming in. So please keep them coming. I'm going to get to those in just a moment. Before we do, let's introduce today's topics of discussion, which will be no surprise to many of you. We are, of course, going to talk about the Chancellor's emergency budget, what's in, what's out, what it means for payroll, looking ahead to November and beyond, HMRC's new starter checklist, which has just been launched. We're going to talk about that. And of course, if we have time, we're going to deal with some more Q&A and some hot topics as well. But before we jump into the emergency budget, we know it's going to take a little bit of time to get through everything. We're going to start with our first poll. We're going to check you're all awake. Poll number one is this. Our question: do you agree with all reversals in the new budget? Very simple. Answer yes, no, or not sure. I'm sure everyone's going to have an opinion on this. I'm quite excited to see the results. So while we're waiting for those to come in, I'm going to ask Simon our first question of the day, which comes in from Carrie. She says, and we are going to cover this in the show anyway, but I'll ask it while it's live. Do you think it is a possibility that the health and social levy will be back in starting from April 23?
For April 23, I doubt it, is the initial feeling. So that's a proposal that is continuing to go forward, is the repeal of the health and social care levy. However, we could end up with the politicians that brought it in the first place. So if either of those or both of those or whatever are reappointed in a new government, we may find the health and social care levy reappears. But at this point in time, April 23, no.
Okay, fantastic. Well, let's see how we've got on with these results coming in now. I didn't think this one will take too much time to get the results in. If we can close those off, I'm going to ask Richard to comment on the results. So pretty close split between the yes and no's and the not sures. What are your thoughts on those results there?
Yeah, I think there's a number of things here. Firstly, we are still really 4 or 5 months, or more than that, 5 months away from the bulk of the change. So I think people are probably putting a little bit on the back burner given all the other stuff that's going on. But I think also Simon's right. In this, I guess, time of change, who knows what the actual position is? I think the more yeses are going to be those who have been included in things like IR35, because again, that's been a bit topsy-turvy, and for employers creates quite a lot of administrative work, where they may have been sort of brushing their foreheads a couple of weeks ago thinking, well, actually, that's quite good. But I think also, we're going to talk probably more about the political situation today, but principally, you've got to consider that we were in a position where promises were made to get a job, which really the country wasn't in a position to make. So, where our wonderful Mr. Hunt has sort of reversed so much, you'd certainly think that a lot of that is just pretty much common sense given the fiscal situation of the country. So,
yeah, I think you've summarised that pretty well. Any additional commentary you'd like to add to that, Simon?
No, I think that's right. So I guess it could be viewed that Jeremy's saved the nation from disaster, but actually all he's done is switch off most of the measures that were announced. And so we've just returned to how it was, but with some exceptions. But I think the whole hustings situation got to point of promising, whereas actually was the candy in the tin. I'm not sure if there was.
Yeah, it was a live experiment, and we've already seen the results hit the market.
I think so. But it's also quite interesting. I was listening to the radio this morning, and they were talking about the fantastic fiscal plan and policy that Jeremy Hunt has. Well, what is it? Because all we've actually seen him do so far is reverse out stuff that had already been said. So I'm quite challenged and intrigued by what that actually looks like.
So, well, let's dive into some of the changes. We know that corporation tax has been cancelled, dividend tax has been cut, it's been cancelled. The basic rate of income tax remain at 20% indefinitely. We're going to talk about that in just a moment. Off-payroll working, something I know Richard's a real expert on. We're going to talk about that as well. Let's start with the plans to reduce the basic rate of income tax from 20% to 19% in April being scrapped then. Simon, I'm going to let you take the floor here.
Yes. Okay, so yeah, this is one of the policies. This was actually a Boris and Rishi proposal for April 2024, and Liz and Kwasi just brought it forward 12 months. So on the face of it, seems a reasonably sensible idea, I guess, if we can afford it, but can we? That's a different matter. But the reversal isn't just a reversal of the proposal to bring it forward 12 months, it's actually a reversal of the proposal altogether. So there is no longer an intention to introduce it in April 2024 either, although there is an indication that when the nation turns around and we're all growing, the economy is growing and everybody's doing fine, that we will look at it at some point in the future. But 23 and 24 for the drop from 20 to 19% is off. Both are off, so they've gone, and that's been indicated as occurring for the foreseeable future. Now, whether a future politician will want to spring something out of the the rabbit out the hat, we'll see. But at the moment, it's gone.
I understand the dividend tax cuts have been cancelled as well. And that's worth bringing up here.
Yeah, that's an interesting one, Nick, because that is the health and social care levy partly, isn't it? So although the health and social care levy has been repealed for us ordinary oiks, if I call us that, it hasn't for directors who want to pay themselves dividends. So the 1.25% increase on dividend tax, the first £2,000 is still tax-free, is still going ahead. So that part of the health and social care levy changes hasn't been repealed, which is interesting.
I think
but I guess there's probably a risk. Go on.
We're going to jump into some of that. Richard, I'll come to you just one moment while I've got it here, because we're on the dividend piece. The corporation tax cuts have also been cancelled. I know we're not necessarily payroll related to all these areas, but I think it's worth a brief mention.
But do you believe that, so this is two things. So if you look at the tax deduction that they were going to make to the individual, this was in the policy 10 years ago from the government, that by the end of this government, we would see, or this period of Conservative leadership, that we would see a deduction in tax. Obviously, 2024 is the year of the election. So I guess if you look back to 2020 situation with Rishi, principally he's put that in place as a commitment at the last year of the Conservative government, because it's always been in their manifesto to do so. When what we then saw with the newer government was they were then just using that as another sort of carrot on a stick. But when it comes to companies, do you start thinking, and also obviously the higher paid, do you believe, and I'll ask Simon this, do you think that this is almost a knee-jerk reaction because of the reaction to the 45% removal, that they're giving everything to the rich, and therefore they're now almost going the other way, hence with the dividends and alike, and obviously the end of the possible reduction in the corporation tax on the bigger employers?
Well, I think there's an element here of balancing the books probably wasn't on the original agenda.
I'd agree.
Of the mini budget, but I'm not sure if it was necessary on the agenda of the prior either. But because of the reaction of the market, it's on the agenda of Jeremy Hunt and co to get that confidence back in the UK economy. So hence why I think we're into a stage of spend and not have to pay tax, because that would drive growth. Not my words, their worth sort of thing, to increase the wealth of the economy eventually through trickle down economics. The reality is they're now having to justify the spending and debt of the nation as a consequence of the proposals. That probably goes deeper than the previous administration. Probably say they probably weren't planning on doing that. And so it may actually accelerate an element of austerity. It's just a thought.
Well, really interesting questions come in from Amanda here, which to bring it back into the world of payroll and how it's going to impact. We've obviously got the payroll apprenticeship scheme, which is had huge success and a lot of uptake. So you asked the question, do you think there'll be any impact on the apprenticeship levy going forward?
There's Nothing proposed yet. However, the threshold isn't being raised either, so the capture of employers having to pay the levy will just naturally increase without it actually appearing as if any rise has occurred.
Yeah, I'd say it's a very quiet area because I think the government have always wanted it to be even more of a success. So, the usual sort of hollering that comes out is about increase in use, increase in expansion, rather than change of. So I think if they made any announcements about alteration, especially to the employer's contribution, I think that would probably push a few people over the edge.
Yeah, I might be inclined to agree with you. So tell us a little bit, Simon, about the plans for the new VAT free shopping for international tourists being scrapped and how that might impact.
Well, yeah, this is more an economic thing than a payroll matter, but the intention was to encourage people to come and spend their money in the UK. So from overseas, so tourists, etc., could just come and at point buy VAT-free shopping to potentially take back to the home nation. And I guess that incentive, which would probably been seen there to encourage tourism from overseas, has been removed as a consequence. Although that was looking as if it would affect some amount of money from the economy by promoting it. I guess the intention was to actually build up the amount of turnover and sales in the tourist type industry.
I think it was the only thing in the plan that actually brought money back in, wasn't it, as opposed to going out.
There's a lot of countries where that is the case. If you go to the Caribbean, for instance, it's at point of till, as it is in so many countries. But I think it's just are they sort of working on the grounds that we're making ourselves more open to suggestion, that we're giving money to others again? And it could be part of that as well, but obviously it's a fiscal decision because the amount of VAT is probably quite a large level at the initial point.
Let's move the conversation forward then back into the realms of payroll and off payroll working R35. I'm going to start with Richard here because I know Richard has travelled up and down the country training people on R35, making sure people are compliant. Then it got scrapped. Now it's coming back. This is definitely one for you to take the floor with, Richard. So tell us a little bit about
I was a little bit worried I was going to have to start giving people refunds for the courses that went on a couple of years ago, which could be carnage. I think you saw about 1,200 people go through it. So thank goodness for that. It made no sense, I think, the initial announcement to scrap it. There was a very, very good reason why the process was changed, especially in the private sector. The public sector had been, I guess, creating and adapting since 2017. It made sense the private sector came in as well, because if you sort of looked at the stats that came out of government at the time when they were making the announcements back in sort of 2019, 2020 of the amount of taxation that wasn't being collected, there was a huge reason for it. It was billions of pounds within the first 10 years. So to then make the decision to try and turn it around seemed very counterproductive, especially in the public sector, where it had been the norm for 4 years already, and that was the process. So it almost makes you feel like, why did you even bring this one up? How is it going to improve or, I guess, increase the level of compliance and money being received? A lot of employers, as you would imagine, spent a lot of time and a lot of money creating process. A lot of contracts were changed or ended because of the variation.
I'm one of those people to do that a lot.
Yeah. Let's have me come in your office and talk to you, for goodness sake. I mean, how bad could it be? But also, as I was saying, not only that fiscal aspect, but where did the value come from moving it back to where it was? The only sort of argument was, well, it will reduce the administration on employers. Well, they've had a few years to get used to that now. Right. So it's one of those, why did you get rid of it? And now you look fairly ridiculous bringing it back again. And it's probably one of, actually, even though the least effect on the general public, one of the ones from our side that is probably the most ridiculous decisions in my mind, obviously, of the lot.
Yeah. We've had an interesting question coming here from Ben. It says, do you think, I'll leave this with you, Richard, if I can for the moment. Do you think the IR35 rules strike a fair balance considering employees of personal service companies essentially fund their own holiday, pension, etc.?
I think so, on the grounds that they are still receiving income, and it's the income that's being considered. So what it is, it's a far more stringent, because it's for the employer's own interests, to ensure that the liability is paid on income. Because you can say the same about the self-employed or casual workers. So it's not a unique situation in that respect. I guess the irony of it as well, though, which is for the employer would probably make them happier, is obviously by doing it through the payer, there is additional cost to the company, because obviously you've got ERS NI, which certainly wouldn't have been something that would have been a situation before. So I think it's a very double-edged sword for an employer. There would have been a cost saving for the employer, which is great, but on the other side of it, the government are trying to collect money to pay the, £8 billion service charge on interest a year, and therefore surely they should have the correct boundaries in place to ensure that they're getting what they should be each year.
Are we expecting it just to be purely scrapped, or do we think there might be more balances to be had here? There may be some amendments, or it was just a knee-jerk. That's just change.
No, I genuinely think it's a knee-jerk reaction to put it back to how it was. What they've scrapped is removing the process that we've had since 2021, and for the public sector since 2017. And whether the argument was it will reduce the administrative costs on the employer and reduce their ERS NI bill. I mean, really, what are we talking here fiscally? I mean, it's not a huge percentage of most employers' workforce. So yeah, it just seems a little bit naive, is the word I'm going to use.
Any comments you'd like to add to that, Simon, from your perspective?
Well, it's a strong, quite an emotive subject, off payroll working, and there is a very strong lobby group out there. That will have been heavily into various politicians, and equally a lot of the politicians have come from an entrepreneurial type background, so they may well have been these types of contractors or have their own personal service companies or deal with that or have associates with it. So I guess on the one angle, there's a sort of a view that is it actually denying entrepreneurialism? The other hand is, are these actually quite often heavily used as mechanisms to avoid paying income tax and national insurance? Because you're a director getting, I don't know, £150,000 income to your business, yet you only pay yourselves £12,579 a year. Well, that's a coincidence. The rest is all under expenses. So it's very difficult, isn't it? And you pay yourself £2,000 in dividend tax free. So it's a difficult one. I guess the challenge is, is it a hammer to crack a nut? And how does the government tackle the real problem? And I think that's always going to be a floating thing, and we see it because with the naming of tax avoidance schemes, this year the transfer has gone from PSCs to umbrellas, and then we've got and we had PSCs, of course, who were doing loan schemes where they're offshoring loans and never having to pay them back, to now be captured where now they're under an umbrella where they're actually an employee, yet again the money seems to be filtered through the Cayman Islands and returned in loans that never had to be paid. So we've had a number of those named, and it's sort of old ideas seem to get reborn in other means. So it's a very difficult one, and of course we in payroll have to deal with aspects of that, of dealing with the umbrella. But the funny thing about lots of those arrangements is a number of them are in public sector. So they're not even private sector areas, but that then affects others. And so if we talk about the negative side of this on a social aspect, is this is actually affecting lower paid workers in the NHS or care sector or other similar types of organisations where you think, should they really be in personal service companies? Should they really be under umbrella employment agency, or should they just be an employee? And so it gets very difficult, because not all of these cases have been people that are earning tens of thousands or hundreds of thousands of pounds. Some of them are only earning, you know, 20 to 30,000 pound a year, yet they've been put through a vehicle that then traps them into significant debt repayment.
And I think this was going to be my follow-on statement, is exactly that. There is off-payroll workers and off-payroll workers. Let's put it out. So obviously, from doing so much work with the subject a couple of years ago, you know, you look at some of the areas, even in the private sector, where the largest groups of off-payroll workers are, quite often it's charities, which you wouldn't think about. So we did a lot of work in 2020 with a number of very high-profile charities, and a huge number of their workforce came under off-payroll working. And that's certainly not the same demographic that Simon obviously started with, where we're talking about real tax avoidance, possibly through senior leadership and using the process and systems that they have. So I think, you know, I hate to use a phrase double-edged sword, but it truly is in relation to how it affects people and what the variation would have meant from the original announcement by whichever chancellor it was before this one.
Well, we've got lots to get through. What I'd like to do, we've got 116 people watching at the minute. I want to get them all involved in our next poll, because we want to get through all of these changes. So the poll for the next one is, when will you start planning for the Chancellor's proposed changes? We're now, of course, referring to Jeremy Hunt's changes now that we're moving in, out, in, out. So right away, I'll wait until I know it's definitely happening this time round, or not sure. Perhaps the responses will change slightly now that Liz Truss has since left as well. I think we wrote this poll before that had even happened. So please do put your responses in. Let us know what you think. And I'm going to ask for some commentary on those as they come in. While we're waiting for that, there's another question that comes in from Stacey that says, does anyone know when we expect to hear about national minimum wage rates for 2023? So I wonder if you could answer that question just while we're waiting for those poll results to come in.
It's a great question. It's a question I keep on asking all the time. Let's see if something's announced on the 31st of October. Is a suggestion. So the sort of more formal budget was announced as being on the 23rd of November. That's now being moved forward. So we may get some announcements or confirmations on the 31st of October, or it may be they won't be announced before until around the 23rd, because the 31st of October, I think, is about settling the market unrest and bringing in the OBR, etc., and showing that we can actually balance the books. So yes, and that goes for other things as well. When will the student loan thresholds be known? When will the national insurance thresholds be known? It goes on and on and on. But there is an indication. So there was a consultation of values. So those sorts of consultation are known of what the I forgot what they call themselves now, the Low Pay Commission were proposing, but we don't actually at this point know what was recommended to the government for going ahead.
No, I was going to follow that on. I think there are periods of time we would usually expect to see certain things because the decisions are made based on the CPI, statutory payments being a classic example. There will be a date in October when that is decided, but you know, I can't believe that we're going to see them this year till later, because we have this real issue this year, and that is usually it's based on inflation. If we start basing some of our increases on inflation, it could make the country more bankrupt than it already is. So I think there is going to be a lot of conversations that need to be had as to exactly what rate they're going to increase things by. You may have already seen last month that they were talking about inflation on benefits, that they can't use the normal format, or they weren't going to use the normal format under Liz Truss because the increase would have been too high. So I think there is a lot of umming and ahhing to be done in the next sort of 4 weeks.
Yeah, really interesting point you raised there, Richard, and thanks ever so much for the question there, Stacey. So let's jump back into these poll results then. Let's see what the results say. Just remind everyone of the question, which is when will you start planning for the chance to propose changes? So we've got 15% say right away, 65% say I'll wait until I know it's definitely happening, and 21% say it's not sure. Interestingly, we've got a comment in here from Jessica that says, for the NI reduction right away, anything else, I'll wait. So what are your thoughts on those results, Simon?
Well, that comment there seems fairly sensible. So I think, yeah, we're in that sort of position as we as payroll professionals actually know what's going to go on for the next year. At the moment, we're probably all feeling a little bit clueless, even those that may be in the know a little bit. There's an element of, well, it could turn next week, and but correct on the national insurance changes. They're going ahead from 6th of November. So be prepared for them. There are things.
Yeah, I think we're going to talk about it separately in a minute, so I'm not going to delve into the NI one quite yet. But I think we could have guessed the answer on this poll.
Yeah. Although interestingly,
you could have the same question of who's going to be Prime Minister the week after next, and it was, I don't know, I'll wait and see what happens. So.
Yeah, absolutely right. We've had some commentary come in from Kristen. It says, for commentary on your poll, our company budgeted to provide a cost of living payment to employees based on the tax reductions previously advised. Now that those have been reversed, we're not sure what will happen, so we're not doing anything else until things are confirmed. Interesting. And thank you ever so much for the interaction we're getting today. Lots and lots of questions, lots of commentary coming in. Keep it coming. I'll do my best to read them all out if I can as well. So please do keep putting your questions to our panel. Let's jump back in then to the budget and to everything that's happening since the proposed changes were brought in. I know that Richard just mentioned we're going to get into NI in just a moment. Before we get there, though, let's talk a little bit about the energy bills for households, because I wondered if one of you can take the floor. Really, we're talking about how that will only last till April and the reversals there.
I'll jump on this one, shall I? Simon's had to do too much. So I think there's a lot of misconception. Funny enough, Simon and I were talking about this earlier on. There is a lot of misconception about this statement, that it's only going to last till April. But as you would imagine, media and social media especially has jumped on that one very hard. What the Chancellor has done is, I guess, given the government the opportunity to have a more realistic review period. So principally, April isn't the end necessarily, or hey, it might be, but who knows. But what they have the ability now to do is by April make a genuine, I guess, assertion against the position of the country by the time we get to the end of the tax year as to what genuine support is needed after it. And I think that's really, really key, as this is a statement. But as always, it's very misread by so many parties.
Simon's smirking there. Go on, Simon, jump on in. I know you're itching to add to that.
Well, yeah, I'm going to guess it's starting to go into opinions and views to a certain extent, but yes, he hasn't said it's ending in April. He's saying it's the current scheme runs till April. We'll review what we do from there on. So it is very much a future review. But I guess they're coming from an angle as if we make a commitment to pay £400 a household for 2 years to the energy companies, then it gives them a license to do whatever they like. Whereas I guess there's probably a view of thinking, come on, why aren't you producing cheaper energy? And it does seem strange, doesn't it? We've gone into you think, oh, electricity was cheap, gas was fairly expensive before, maybe at times, let's go more electric, let's have our electric cars, Nick, like we have. But and then we realised that actually all that electricity or quite a significant amount of it is made by burning gas. So we're burning gas to make the electricity. So that's why the prices of electricity is going up. And it's sort of, well, aren't we all full of wind and sun now? We've had a fantastic sunny year. We should have loads of stored up solar power. But no, majority of our electricity comes from burning gas.
I want to bring us back slightly to Richard. When we were talking about the poll, he said we're going to get into national insurance in just a minute. Let's get into national insurance now if we can. We know that the national insurance cuts promised by Prime Minister Liz Truss are still going to go ahead, as I understand it. I wonder if you could just talk us through the situation regarding national insurance.
Yeah, I think this would have been the straw that broke the camel's back if they'd have reversed this one as well, given the rhetoric before it came in. The view of the implementation of costs, even though obviously the argument was always, if you went to the man on the street and said, will you pay an extra £5 for healthcare, they'd all say yes. But I think in principle, and a lot of people said, before April, we're probably a year too early anyway. It was a very common perception of this, that they'd jumped the gun by 12 months, given we were coming out of COVID. And even at that point, obviously nowhere near the position we were in, that this one would have just been too much to bear, I think, if they'd have actually reversed this one as well. Obviously, software developers would have been horrified, given they're probably way down the road now. But I think, it's probably the right decision to make. They've got to keep and give back something. But actually, we're not getting anything. We're just not paying as much extra that we were going to. I guess on a payroll, let's get very payroll centric. This does make certain areas even more complicated than they were going to be. So if you think about Class 1A and Class 1B national insurance, first of all, you were already having to calculate 2 different levels of national insurance against your benefits for the year. You're now going to have 3 calculations within 1 year, which is going to make a significant amount of labour requirement around P11D calculation, unless you have software that's clever. But also, obviously, that same issue then goes over to directors, where it is a cumulative NI bill for the year. Well, that number just keeps moving, and it's moved obviously now again to another level. So I think day-to-day payroll, because obviously it's non-cumulative, it has to, it's good that it's still occurring because it is a saving. The losers are obviously software developers who are having to rebuild again. But there is obviously this knock-on for the non-Class 1 national insurance standard, which creates work, most definitely. We've had on the helpline, we've had so many calls about, I've got benefits, I'm doing P11D, what NI rate am I using? Am I just using the one at the time I do the P11D, or no, it's relative to the month. So I think, again, a bit of a double-edged sword for a payroll.
Yeah, Simon, I see you nodding along to some of that, and obviously as someone who's part of the IRE committee for software developers as well, I'd be keen to get your commentary on your thoughts on this.
Yeah, so I chair the BCS Payroll Specialist Group as well, so that's British Computer Society. Have done that for a few years, taking over from Norman Green some years back, and yeah, it's been a tough year for software developers. It's going to be another tough year. In many ways, the Chancellor's reversal of lots of the proposals actually makes it slightly easier for April 24, assuming we're sticking with that, because in effect we don't have to go ahead with some projects that initially we'd have to cut out. But the November change is going to be interesting. Yeah, payrolling and Class 1A, it doesn't really fit because P11DB, but as they'll say, the P11DB assessment point is actually 5th of April 2023, so the 14.53 percentage point rate applies to benefits. But then you've got starters and leavers, and I think, as Richard's indicating on the director, what do you do with the direct 2 left in May? Because in effect the national insurance is now wrong. Some use the alternate method and others use the standard annual method. The standard annual method would just come out in the wash as long as someone's paid again. For the others, if they've gone, your national insurance records are all wrong, so they need to have some sort of trigger and recalculate. So it's a strange, we've in effect split now into 3 or 4 different things, haven't we? So employees are now different to directors, whereas they used to be the same. They're now different. They'll return again in April 23 to being similar again. Class 1A on terminations and sporting testimonials is point of payment determines, so you don't have the blended rate on that, you have the 1505 or the 13.8. But for Class 1A on benefits and PSAs, it's this 14.53 regardless. So lots of people like to do notional calculations in the payroll to predict what these values will be. Well, they'll all be wrong now. They're the wrong value. You can recalculate and just use it as a means of putting money aside. You'll have been putting more money aside than you really need to, so it doesn't matter. It's just when you come to your filing, you need to do what's right, not what you've been doing all year. So interesting times. We've certainly communicated out to all our customers about the change. I think the changes are going in next week and the weekend following for the 6th of November. You could say that's fairly tight. Well, that's pretty quick turnaround actually to get all this stuff tested, because now you've got directors, ordinary OICs, testimonials and sporting and terminations all doing different things now, and PSA and PBIC. Of course, we were asked to do a message at the beginning of the year telling everybody that 1.25% was for the funding of health and social care. True for England, not necessarily true for Scotland or Wales or Northern Ireland, but for England that was true. But everyone was asked to do that message. You're now being asked to stop it. So if you've been putting the message on, take it off. Saying that, when the new Prime Minister comes in, we might put something else on instead. So it is an interesting time, but I think we're getting there. Some will say, will other things come in for April 23? HMRC actually have issued the technical specifications for 23, and things like health and social care levy or anything else are not there. So there is an element of some certainty. I guess they could change it, but there is some certainty that there's nothing in the HMRC IT plan for introducing anything new, or even anything that was previously announced as coming back. They've actually
we'll have a dog and cat levy by April probably.
Yes.
So be something.
Well, there was some hint of international levy as well at one point, so I think that's just disappeared.
Really. Thank goodness. But I'd say, just following on from Simon very quickly, there is serious impact on employers around staff confusion now. I think, a lot of employers spent a lot of time. So, as Simon does, I speak to numerous employers every week where they built systems and they built processes and they gave staff calculators to work out what the impact was going to be on them. All of a sudden, that's all going again, and there's probably another period of education for the staff again. And I think that's probably the biggest issue for payroll day to day is, people will be confused. They're not all payroll people like you and I who get it, understand it, know what the score is, when all of a sudden in November their pay changes again. And I think it's going to be a very challenging month. I really do.
Well, I've dropped into the chat box.
There's another angle. Sorry, there is another angle, Nick, which is, of course, some people may have upped or changed their salary sacrifice arrangements to benefit from the additional, 1.25% is 2.5% in reality, difference that this year made. And some employers, I think we've seen that in some of the chats we've been involved in, Nick, are obviously, some give the NI saving to employees in some other form. So it might be an enhanced pension, where you've given them something you're not going to be paying anymore. So there's an element of, do they have to change their decisions on what they've done, because that 1.25 or that 2.5%, if you add them both together, is no longer there.
And that's absolutely key, because, as I said, again, going back to earlier in the year, people were revisiting salary sacrifice as a way of supporting their staff to minimise the impact of the NI increase. So, it's an absolutely massive point, Simon.
It's far more demotivating to take something away than it is motivating to give someone something. So there will be impacts here from a recruitment perspective that you're going to see with disenfranchised employees. If an employer does then change the goalpost because of the government changes. Just to be clear for everyone, I've put what I understand to be the correct changes into the chat, so have a look at that. So I think they reflect what Simon and Richard have been talking about, but also, just in case anyone missed it, the health and social care levy, with the in-out things we're discussing here, the cancellation of the planned health and social care levy is still going ahead at the moment, but of course that could all change. I've got here as well to continuing plans to cut stamp duty. Now, not necessarily directly relevant for payroll, but absolutely something that's in the in-out section here and impacts the way that we're saving to change properties and to change houses. So Simon, I wonder if you could just run us through those plans to cut stamp duty.
Well, I'll try my best, but I won't remember a lot of the detail, Nick. But this was originally proposed to increase the stamp duty cut, and that was announced and came into force on the 23rd of September. That bit I do remember, and that's not being reversed out. It's passed, it's gone through, it's carrying on. And I think the principle here that Jeremy has done is he's cancelled anything that hasn't gone through Parliament and kept everything that has gone through Parliament. So the National Insurance repeal had already passed before he was appointed to the job. So that's why that's staying. So anything before, but yes, someone else might know more on the actual details of the stamp duty, but it's staying.
I've put a couple of things in the chat.
Yeah, it's a stimulation.
Sorry, so I'll come back to this one moment. The increase in the residential stamp duty threshold to 250,000 and the corresponding increase in the first-time buyer threshold to 425,000, which took effect from 23rd September, will remain in place. Sorry, back to you, Richard.
No, as I say, this is also something that stimulates the market, so you can understand why this would be probably more realistic to keep. But then, you could then be, let's be negative, be devil's avocado, putting people into more debt when the interest rates are only going in one direction, which they might not have considered if the stamp duty had remained as it was. So, winners and losers.
And there is an area that does affect, possibly as in payroll, if we're in private business and we've got shares involved, is a change to the company share option plan doubling has also going ahead, because that was announced and has been passed. So that will happen from April 23, so that it goes to the £60,000 limit can be issued to employees, and easing the worth of having So if you operate CSOPs, that has been doubled. And there's also the Seed Enterprise Investment Scheme as well. So that's increased, and that is going ahead. So there are some proposals from 20 September that are continuing. That last one hasn't much to do with payroll, but the CSOP does.
Well, I know that Richard just mentioned that people are getting into more and more debt, and some of these changes aren't necessarily going to help with that. One of those things we're going to get into in a minute is the energy bills side of things. Before we do, we've had a question come in just to keep us on the NI focus for the moment, which says the 1.25% NIC reversal in November will have no effect on payments made earlier in the tax year. So would it be fairer to collect NI on a cumulative basis like tax, so that retrospective changes could be more easily implemented? Richard.
Well, this came up 5-6 years ago, is it now, Simon?
Yes.
I sat in a room.
There's been a couple of consultations.
I sat in a room at a conference, if I remember, near a Christmas, about 6 years ago, where NI announced very openly that cumulative NI was the future, and there was a plan, but it seems to have disappeared into the weeds forever, I guess.
Yes, it depends on the priorities of the politicians at the time. And I think we had a change of politicians and it wasn't their priority to do anything about it. The other angle, and we do see it a lot, is national insurance tax. And sometimes it's quite clearly announced as being a tax, and other times it's not, because they don't want to seem to be increasing taxation when national insurance goes up. So it's a very juggle.
But so they magically align the two thresholds, but they're not anything to do with each other.
So yes, talking about getting into more debt, Richard, you mentioned before, the energy price guarantee due to be in place for 2 years from October 22. The Chancellor's announced this measure will now only remain in place until April 23. Tell us more.
Well, as I said, I think it is pretty much what we said earlier on about this. I think it's not only going to be in place till April. I think primarily this is more about being realistic, not, I guess, holding the purse strings to ransom over a long-term decision, because they could have made lots of others. You know, they could have cut VAT on petrol for 2 years, only to find that petrol drops to cheaper than it was before. So if it had been, it's definitely going to end in April, then I think there would have been more furore. But as I mentioned at the start of this little sort of section, it's not the end, it's giving them a review period to possibly change it. So I think we'll have to see, because nobody knows. You just don't know what's going to happen, do you?
No,
it's,
indeed.
What's going to happen with the war and what's going to happen with everything else. So,
but I do believe there has been an alcohol duty freeze, right? The alcohol duty rates now not being frozen February 23, as previously announced. Simon, any thoughts on that? Are you familiar with the alcohol duty freeze? I'm sure you will be.
As I drink a lot, Nick,
No, I
which you
wasn't
know
meaning
I
it for
don't.
those reasons, or because you're an expert on all
You
things
probably
associated.
picked the
I realise that
two
must be
most
how it came
teetotal
across
payrollers in the UK.
as he
Yeah.
sips from his dip flask.
So you picked the worst two people to talk
Yes.
to about alcohol.
Yes, I think the last drink of alcohol I had was probably 40 years ago, and I didn't know it was. But
I had a glass of wine 2 weeks ago. If that helps.
yes, so in many ways you could say this is probably a bit of bad news, isn't it, for the drinks industry,
Well,
because I
indeed.
guess there were elements to make it less taxed, so therefore encourage the growth of the industry, and of course that's been wiped away, and that is an element of some of these wiping away. I mean, the IR35 people were probably having parties for a day or two, and then suddenly it was all cancelled. That might be the same here a little bit. Is the former drinks relaxation have gone.
Well,
So
we've got more to get to beyond just the budget. I know we could be here for a long time. The long and the short of it is we don't really know what's going to happen yet until we have a new Prime Minister and we have the 31st of October and so on and so forth. So before we jump into the next poll, I'm just going to ask Richard and Simon if you could just briefly summarise the ins and outs of the recent budget, and then we'll move on to the next poll. So I'll start with you, Richard. Overall summary.
I think it was a careless decision made on the back of promises to get into a job. Where the country couldn't afford it. I think that it has been very damaging outside of payroll to the status of what's happening. I think from a payroll aspect, in some respects, it's positive for payroll, but not for employees, because it will cut, if it stays as it is, quite a hefty change in administrative control and also a huge amount of education. But on a negative side, the continuing flux, the variations within year, which we haven't really seen, have certainly impacted what was meant to be a quiet period as we all came out of COVID. So I think it is so two-sided for everything. But I think, she wanted the job, the Prime Minister Liz Truss. She made commitments that we couldn't afford, which is why Rishi didn't, because perhaps he was, and you suspect given what he did before, was probably more in tune with the situation. But it's becoming very uncomfortable knowing what's going to happen week on week, I think, now.
I mean, the irony is that the growth plan was brought in to simplify the process, and it just made everything a lot more complicated. How about yourself, Simon? How would you summarise?
Oh yes, I mean all the tax measures that actually help the individual have virtually gone, apart from the national insurance. So the 1% reduction is gone. Many of it, I don't think we'll be on the 45% rate, will we? Well, maybe some of us will be, but would that have benefited? I think that was a problem for George Osborne originally when he dropped it from 50 to 45. He'd probably have liked to have got rid of it. So I understand an element of the sentiment there, but I think there's an element of you've got to think much more wider in the policy. Now, the national insurance change for November is a national insurance change for April as well. So I don't think we've got to remember that, is we've got this funny 3-year change here, but it then reverts back to normal. But the settings won't be normal. Does that make sense? So we have to make them be normal again. So there is significant change also, of course, impacting April 23, no matter what's announced on the thresholds, even if they don't change them, because we've got this strange going up and coming back down. So interesting times.
Super.
But I think also on the back of that, I was going to say just very quickly, Nick, also on the back of that, and fun if we spoke about this a few months ago, Simon, when we were in Birmingham, people aren't really thinking about what's happening with things like the primary NI threshold next year either. If we are, what is going to happen around the tax freeze? Remember, we're all in a basic rate and limit freeze until 2026. Is that still de rigueur going forward if we change again? But importantly, if you remember, I just spoke about it, they did align the NI primary threshold to the tax threshold or the personal allowance threshold. So are we now saying that the primary threshold's frozen as well now till 2026? So I think there's a hell of a lot of stuff that we don't really know yet officially. I think, after Christmas especially, there could be quite a lot for us to actually configure, understand, and put into place. So yeah.
Absolutely right. Well, of course, for those who are watching this, that's why PQT could be so valuable. So as those questions come in, as the things change, we'll try and tackle all of this in real time as well as we can, of the issues that are happening and impacting the world of payroll. So do stay tuned every single time. Do sign up for each PQT in advance, and hopefully we're going to give you the answers you need as we go through. And we're going to go to a bit of a thought leadership poll next, and this is quite interesting. It's something we wanted to ask you, which is, what's the most demanding thing on your time at the moment? Is it, we know that HR, because we know HR is going through huge levels of transformation, organizational development, new systems. Perhaps they're really pulling on your resources at the minute as they want more data, more analytics. There's a real close relationship between HR and payroll now, so maybe they're pulling on your time. Maybe it's finance for very much the same reasons, or maybe it's the external employees with all these questions we're trying to tackle on PQT today, with all these changes in government policies. Maybe the employees are really unsure of what's going on and they're really draining your time. Or maybe it's HMRC with the constant changes. We're going to talk about the new starter checklist in just a moment, but also the HMRC and the regulations and compliance they demand from you. Maybe that takes up most of your time. So really keen to find out where you find most of your time being stretched towards between these four elements. And when we get those results in a minute, we're going to comment on those. Before we do get those results, we've had another question come in, so we'll ask this while we're waiting for everyone to get their responses in. The question is this: if Kwasi Kwarteng's budget measures had been released over a longer term, does the panel think there might have been a more positive reaction? Let's start with you there, Simon.
Potentially, I guess there's an element of, could it have been dressed in a different way? And I think potentially it could. What if the 45 dropped to 44 and then 43 and 42 over a series of years, and equally the 19%? But it's sort of, the whole lot's been thrown out, hasn't it? The baby's gone with the bathwater. On the 19% implementation, which I guess was seen as a means of helping us. But yes, I think if it would have been addressed in different ways or different timings, then fine. But I think it was, it probably came out as a little bit of a boast type activity with little thought. But that's all right. You can go with the new cake and alcohol tax that will come in. Is that right? Maybe I'm a bit tongue in cheek there. Cats and dogs, that's right.
Anything you want to add to that, Richard, before we get these results?
No, I think it was I think it was a decision that was made to get into a role, and then they just basically opened the garage door and pulled out a bulldozer.
Sure. Okay, excellent. Let's see what these results look like. Of course, if any of you want to comment on specifically why you picked the result that you did, please do drop me a message, and I'll be interested to read out those comments to the panel as well. 63% of you say that HR is the biggest stretch in your time, followed by finance at 18%, external employees 9%. You might find that number goes up as the changes change. That'll be interesting to see. And HMRC at 9%. What are your thoughts on those results? Let's start with you, Richard.
Obviously I'm just guessing, but would HR be a lot to do with the fact that we've changed how we work? There are huge challenges in a lot of businesses due to hybrid, home working, people requirements, effects on contract. So, I mean, from people I speak to, that seems to be still quite a high profile area where there's a lot of requirement. But I guess also as we are changing, and we are seeing a lot of change, a lot more, I guess, focus on well-being, on people management, that you could understand why HR are probably very high profile in any business and has a lot of requirement.
Absolutely right. And we're seeing as well that the connection between the role of the payroll professional and the employee well-being has never been more closely aligned than it is right now. So that wouldn't be surprising. I think you raised a really good point there, Richard. How about yourself, Simon? What are your thoughts?
Yeah, it's interesting results actually, and it'd be good to try and slice that a little bit further down to find out what predominantly those are, because a lot of that HR demand may just be business as usual, but is there something strange going on? So it's an element of maybe thinking, can we do a bit of research on that to
Well,
find out
interestingly,
what are those?
Kristen has pointed in, and I think this probably is the case. Part of an HR WhatsApp group I'm part of, certainly something I'm seeing a lot of conversation about, which is, of course, related to the cost of living. Kristen said that's all anyone wants to talk about lately. We've spent a lot of time reviewing ways to support our colleagues in payroll. In addition to budgeting for cost of living payment, financial advisors, fixing pay dates, food in the office, breakfast twice a month, etc., etc., it's a big demand on payroll time. So cost of living certainly having a huge impact in how much HR are demanding from payroll in terms of, I guess, what can and cannot be done, and then how you go about doing it. Would that give you some context potentially to some of those results, Simon?
Well, potentially so. And I guess if we talk about other experiences of C, sometimes I think there are reactions which are seen as a human means of dealing with the challenges that people have. But sometimes that becomes a bit of a headache for the payroll or benefits people, because what hasn't truly been considered is the tax and national insurance implications, or the PSA or the P11D, because sometimes a good idea just seems like a good idea without actually understanding what that means in reality of pounds and pence.
But just for giggles here, I won't give the name away of who's made this comment, but I've just had a comment pop in that said HR are just useless at accuracy, so we're always picking up their errors. There we are. So it'll be interesting maybe to delve into that a little bit more detail in a future show.
Let's talk more about the dog and cat tax quickly.
Indeed.
I was just going to say that another key area it must be at the moment, it must be something real close to your heart, Nick, is turnover. You know,
sure.
We are seeing unprecedented changes in staffing, turnover of staff, the huge recruitment void, and surely that also must put a huge emphasis on HR's responsibility with payroll currently.
Well, yeah, absolutely right. I mean, there's a definite, I hate the cliche war for talent, but it's out there at the minute, and HR certainly keen to try and improve retention and attraction strategies, which absolutely impacts the world of payroll as well. Interestingly, I've had another comment coming in. I think this is a topic we need to discuss in more detail on a future show, because the comments are coming in thick and fast. We've had HR also rushing around in green cars to look good, and then someone else commenting saying, haha, that's finance. Anyway, let's jump into the next section, the HMRC's new starter checklist. I'm going to bring this to Simon's attention. He's a bit of an expert when it comes to HMRC checklists, I hear. So, Simon, take us away.
Okay, sure. So now we've come out of COVID, we've got the quality people of HMRC starting their exercises up and looking at what's going on with employment. Now, we probably all think that HMRC records have been pretty good. They've always been pretty good, whereas the reality is HMRC records have been pretty much a disaster up to pre-2012 when RTI came in, and I think then they realized how much of a real disaster they'd had before, because they're only dealing with end of year. But at the moment they're kind of analyzing what's going on, because some of the RTI data accuracy coming through is considered poor. And it's something that Rich and I have discussed as well before this call, is what we think as employers as acceptable. The HMRC don't, and let's cover some areas. So the HM Revenue and Customs are aware that they don't receive accurate starter checklists for 3 million new starters a year. That seems phenomenal, doesn't it? I know they have approximately 4.5 million temporary reference quarantine records on, where national insurance numbers are wrong, dates of birth are wrong, names are wrong, etc. And there's an element of what's going on. So I think they've had this exercise to review the starter checklist. They've now made a new interactive starter checklist. They're encouraging employers to use it to get better tax coding application. So they're now giving a series of interactive questions that an employee can ask, and I think it even gives you the ability to email it to your employer. but I think we're probably still a little bit in an HR and payroll world. I think HR have a tendency to feel this is a payroll problem, and payroll need to get it from onboarding from HR. There's an element of, just in the same way as you get right to work checks, you can't give someone a job if you haven't verified their right to work. There should be an element of, and at the same time, declare your tax position. And at the moment, HMRC are seeing 3 million undeclared starter FPS notices, which to me tells me the employer hasn't bothered to collect them at all, or they're doing something else. And that's a real concern to them, because that leads to duplication, incorrect universal credit claims. You've got individuals who are financially struggling, paying tax when they don't need to, because they're paying 20% of everything they earn, when actually they may have no tax to pay. So one way of helping them with their financial troubles is to stop them paying tax when they don't need to. And so this is the area. So the questions have been changed slightly. I think the instruction to employers on what to do with the ABC are slightly better. But I think there is an element of thinking, employers, when you get someone to start, they need to complete a starter checklist. We could say, oh, well, they're bringing the P45 next month. Next month is too late. If you're paying them now, it's actually needed day one. Oh, they'll bring it in next week. If you bring it in next week, it's too late. Under the FPS design, you can't notify a starter checklist after the first payment. It's impossible. And if you do, you'll duplicate the record. They'll now think they have two employments. And so it's an element of just being aware and thinking, okay, is it time to review our start process and ensure that these 3 million are reduced down to virtually hundreds of starters, because it impacts their well-being, their credits, claims, tax credits, universal credits. It impacts them as people, as our colleagues.
Well, a couple of questions coming in on
a
this.
bit of a soapbox. Go on.
Really quick.
Right.
Well, I knew you'd be on a soapbox. This is an area you're passionate about, the HMRC starter checklist. Who knew? It's the first question here. Our employees, comes in from Liz Curran, do not know what to tick on the starter checklist, A, B, or C. Has the new one then simplified? You mentioned a little bit it may have been simplified. Has it been simplified?
Yeah, to a certain extent, yes. It takes them through a series of questions, so it's driving them to the right. So there's an element of, if you've not worked before the 6th of April and this is your only job, it's A. If you've had a job since the 6th of April and this is your second job, but it's still your main job, it's B. And if you've got more than one job, as you're employed in multiple jobs, it's C. And I think it's actually asking them that sort of question to define it more. But I think the concern of HMRC is that actually the employees either haven't answered any question or the employer actually hasn't submitted anything. I think that's where they're talking about these 3 million. They're getting millions where there is no declaration, putting them on 0T1. And 0T1, no declaration, or declaration C would be on the FPS automatically. In that case, it would be a C. 0T1 tells them you haven't fulfilled the requirements under the regulations of ITBA 2000.
I'm going to test your knowledge a little bit here, Simon, because maybe this is obvious for payroll professionals. I've never had to do one, so I'm not too sure. But it says, has question 9 on the starter checklist been rewritten on the checklist? Because 80% of employees misunderstand that and answer incorrectly. Now, I'm going to ask you this without checking, Simon. No, I'm joking.
Yeah. Come on, son.
Question 9. Well, question 9 is different now, isn't it? So it's not quite what we say. Was it? Do you receive payments from a state workplace or private pension? Is question 9. I think we're talking about question 11 through to 13 on the starter checklist these days. No, it hasn't gone the way I proposed to them 3 years ago, because I only had 2 questions, and they were, do you have a student loan and which one? And that was it. In fact, I didn't even ask them. It was if you have a student loan and it applies in blah blah blah, just declare what it is. And they didn't go with that, but sort of. And I think what's been hinted is the question is a bit of a double negative, and I think that's what people get confused about. But the reality is, do they have one? Yes or no? But they have kind of made it a little bit clearer that do you have a student or postgraduate loan? They have made it clearer of no, great, go straight to the declaration. Whereas I think the previous version was a little bit more confusing. So halfway house.
Well, as an observation here and nothing more, I have a friend, actually I think I have two friends of mine. Unfortunately, I was not one of these people. Mine's paid back in full, who never actually left university with similar debts to mine 20 years ago and never paid back a penny. They just never, ever had anything collected. So maybe they're one of those 3 million records that have been put in incorrect, but they're, whether they get found later or not, Simon, I don't know. They've never paid back a penny. We're 20 years on now. They just never got
Well,
collected.
that's good. Was it around 20 years ago? I've got to think. On that, time just flies by, doesn't it? So, and you think, how long have these things existed for? But interesting. It is interesting. Or maybe they're one of these others, because the other you might find interesting statistic is national insurance numbers. I'm just aware that there are 5,238 people with the national insurance number AB1234568. So I think you find there are a number of thousands of people where the national insurance numbers being supplied are just made up. That also impacts universal credit claim and pensions. And if you genuinely have some of these numbers that I'm aware of, then they're going to get tremendous pensions when they retire, aren't they? The genuine one, anyway.
Absolutely right. I mean, it was sickening for me having paid it back to find out some of my friends didn't have to, but there you go. Yes, luck of the draw by the time of this. We've had a few more questions come in.
I'm going to publish mine. I think it's a really good idea.
I'm going to run through a couple of questions that come in. Obviously, a popular subject here. Kristen just makes a comment saying, yes, the double negative, exclamation mark. So good point there, Simon. Fern comes in and says, we ask the new starters to complete the form before they join, which often leads to them picking box C as they're currently employed elsewhere, and it causes issues every month.
Yeah, that's education then, isn't it? It's just the case, unfortunately. I think the bigger problem, and, you know, I've heard it so many times, we can't be bothered because HMRC will sort it out. And that is just such a ridiculous statement to make because, you know, especially with all due respect to lower paid people, it has an enormous impact on them when they start working with you, when they probably need the money the most.
Yeah.
So I think there is a lot of ignorance with all due respect to the industry.
Yes.
A really good point.
And it doesn't explain the 0T1. Which I think is what they're seeing with most of these cases. That would explain the BRs because that's what tick box C does. But if it's undeclared, it's only the 0T1.
Well, a few other observations here. Obviously, a very emotive subject. Who knew that the start checklist is bringing out here? But Carrie's commented said, even if they provide a P45, the P45 does not let us know what student loan they are on. We still get the employee to complete one. If they have a P45, does the interactive start list let them carry on if they have a P45?
I've never tested it out, but I would have hoped so, that to the extent of the completion of the questions, but I don't know, to be honest, Nick.
And on the back of that, I mean, we could go back to, I think it was August or no, a bit later on, September or October, HMRC were very clear in their employer bulletin about when you should be completing the new starter checklist. And it is on 2 occasions. Number 1, when they do not supply you with a P45 on day 1, and number 2, if they have provided you with a P45 and they tick the student loan box. It's very clear.
Yeah.
To take the conversation full circle back to you, Simon, I suspect this is back to that HR, or is it payroll responsibility response here. We've had someone, Emma's commented, say, we issue new starter checklists to all new joiners, but some don't return them to us. When this happens, would you suggest it's our responsibility to chase them up?
I think this goes back to the days of Margaret Knights. I don't know if you remember those sort of days, Richard, but possibly that was the policy lead at yeah, I thought you would be, because you had only been 4 then. The policy lead at HMRC that in fact encouraged, I mean, it's going back to the P46 days, encouraged the P46 incorporation into the start form. So there's an element of, I'm sure the data quality people would like to encourage employers to make it part of their induction process. So in effect, when you're putting your bank account details, you want to get paid, you also make your declaration, and you don't have to use the form. The principle then is you could actually adapt it into your own form and start process, but to collect. I think the encouragement would be to get it done.
Yeah.
I understand that some don't want
to say, and I don't know if either of you may have an answer to this one, but are larger or smaller employers the worst culprits for not filing new starter checklists?
Yes, is the answer.
Yes, larger ones.
Sorry. No, it's small, I think you find. I think
I would say that there's less process, with all due respect, in a smaller business. So I would probably, if you polled me, I would probably poll on the same side as Simon and say it's more likely going to be the smaller businesses.
So you're both in agreement. I've got a question.
Well, no, I'm not, Nick. I think it's a mixture of both. I think if you had the HMRC CDIO looking at this and they named some of the largest culprits, some of them would be quite large employers.
Substantial. Yeah, I can imagine. Question comes in from Joe Gibson. It says, temp to perm employees always consider their temp employment as the same job, even though we outsource the temps. I get a lot of false A statements.
Yeah. It's an interesting aspect. I guess there's an element of thinking it is the employee's declaration. So should we police and deal with an employee's declaration? And I'd suggest no. But HMRC will potentially correct that, going back to Richard's thing about we shouldn't expect that. I think it's complete the declaration and take the declaration completed.
Yeah. I mean, it's easy to see why that error may occur. You know, if you're working on site somewhere as a temp, that's how you'd read it, which is a good point.
Well, yeah,
and last but not least,
people will read what they want to read and sign what they want to sign. I think it's a very difficult area. Of course it is.
I think with starter checklists as well, let's be honest. I mean, how much attention are the employees really giving to them? They just see it as a quick form, quick read, not realizing the impact that the wrong statement can potentially have on payroll. I think maybe that's where there's an education gap on the employers themselves.
Well, and there are oddities in it because it's not a perfect world. So I think the encouragement here isn't for perfection. I think it's for improvement. But when my daughter went to uni, there was an element of she worked at, I don't know, a pizza restaurant, a theatre, and a shop. So 3 jobs. They're probably only a few hours here, there, and everywhere. What do you do on the completion? And this is after the old student tax form that we used to have, and she asked her dad, guess what I told her to tick, and that was A on the lot. And you think, well, that's wrong, but the reality is if you added all those employment incomes together, they didn't exceed £3,000, so she wouldn't have been due to pay tax in any of them.
Last but not least, and on this subject for now, I've got Tina's comments that said, why do HMRC not use NI numbers to recognise people on the FPS? Do you know?
Well, they do use them, but not on subsequent submission. So it's an interesting question, and one of the problems that that HMRC have. So when they receive an FPS with an incorrect or a no national insurance number on the first submission, they in effect place that individual into I'm going to call it a quarantine state or a TRN. So they create a TRN record. When that individual phones up HMRC and asks for a refund, they'll deny they've got a record for them at all. In fact, they'll probably even say you as an employer haven't reported them, when actually they're on every FPS record submission. But because they're a TRN, they're sort of frozen to one side. So they'll collect the tax, but they'll deny or associate that with any pension entitlement, etc. Then if you send a national insurance number the next period, if they've created it into a TRN, they don't update it. Because it becomes a citizen matter. So the new starter form is an official form. Corrections subsequently from individuals aren't. And so there is a little bit of conflict there, but they do try a trace. So even if they get a non or an invalid number, they will try and identify the individual. But then you've got the problems with the MAGIs and the riches sort of things, or even the Nick. Are you Nick or are you Nicholas? You know, it's that sort of thing.
Yeah.
They do have tracing issues and challenges. You see, I'm Simon, but my first name is actually Philip. Just to complicate things
Depends
for
if I've been
people.
good or bad, Simon, usually.
Well, there's probably a middle name as well if you've been really bad, I imagine.
Yeah, very true. Very true. Well, we'll talk about the HMRC. Let's jump to the next slide. We'll make conscious of time here. I want to find out experiences with the HMRC. We talked a little bit about this in our last PQT and something that was a real hot topic of conversation. I want to find out about whether people are getting too many inquiries. Do you get NI letter M messages? So, Simon, I think you brought this into the slide, so I'm going to stick with you just for the moment and just wanted to kick us off.
Sure. Well, you know, two of the organisations I chair, I mean, Rich and I both sit on the employer payment group of HMRC, but I chair the BCS Payroll Specialist Group and an organisation called Irene, which is a user network. But we're seeing lots of people having trouble with misbalances on their accounts, and I think there's an element of it would be good at this stage, because we're out of COVID, understanding a bit more about what people are experiencing. The big one that we're getting lots of reports on is people getting a message that they're using NI letter M for someone that doesn't qualify for it. However, the message doesn't tell you who, and when you're 30,000 employees with 5,000 people on letter M, it's very difficult, and the birth dates all look great, and there's an element of whether others are experiencing it and whether there's a pattern for us to take forward, and equally expanding that to say, are the patterns of other things in relation to, I don't know, even student loan messages, because Rich should probably know I'm a big critic of the student loan generic messages because they're a waste of time, or even the ones that you haven't deducted when it's because they haven't earned enough.
What are your thoughts there, Richard? Is this something?
No, I follow exactly on with Simon. Yeah, I think for an employer there is certain frustration because of what you're actually receiving and how generic it is. So the GNS messages for statutory for the student loans, for instance, as Simon quite rightly said, are horrendous. But no, I think it's, are HMRC helping employers with these queries? And I think the question first one is, all right, are we getting too many from them that are, I guess, over complexed or unable to be actioned, I guess.
So what can we do? What can we do? What can people do in the situation? What's the?
Well, I think yeah, I think this is where maybe in some of the forums we need to identify it, but there are a couple of organisations around. So Irene can be found at irene.net or irene.uk, I think. Richard will deal with a number of people. He's a sort of a representative under the, I don't know, has the Payroll Alliance aspect now disappeared and it's now the Payroll Centre?
That is the Payroll Centre. So CIPP and ourselves would probably have quite a similar start point, which is what we're getting in from the members. So we record every single phone call that comes in to the help desk, for instance, and we certainly align those that we believe are important out, and obviously CIPP do exactly the same, where we're acting as almost like a gatekeeper. And if we got a single one, perhaps we won't do much about it. If we start seeing trend, then it's absolutely something, as Laura and the guys at CIPP do, we start pushing back on those, because we're here to represent the industry. So
yeah. But I can be contacted at simon.parsons@sdworx.com. SDWorks is with an X. There's things like that. We're just interesting because Richard will know I've asked a number of queries or concerns at the EPGs over the past 3 or 4 meetings. Tends to get a rebuff a little bit of saying, well, we need primary evidence of the concern. I think it's out there. I'm seeing it with a number of employers, especially this NI letter M message. Are you getting spurious messages? If you are, then that's the sort of information I'm interested in to take to our friends at HMRC EPG committee to progress, to make better. Because I think the executive secretary, who's now in charge of HMRC, is interested in simplifying the burden for us as payroll professionals or for employers.
We've had a delayed question. I'm going to just jump back before we jump into our hot topics as well. We've got a little bit of time left remaining. It comes in from Yvette Fensom. It says, delayed question, apologies, but with missing NI numbers, can you submit a Nino request through SD Worx? I know you can using Sage. So I don't know, this might be a system specific question.
Yes, if you apply it as none, it will respond. So the Nino request is done through the standard process. Now, whether we expand that for a real-time request, etc., it's something that's being explored, but that would be separate to the payroll process. That would be more the onboarding aspect. Can be done via the BPT, but it is an automated part of the FPS creation.
Great. Well, we've got a little bit of time to jump into some hot topics. Now, we've talked a little bit about one of these, which was the national minimum wage question that was put into the question box earlier on today. So I think we've sort of half tackled that already as to whether or not that's imminent. We've got some government insecurity, cost of living, UK inflation at 40-year high of 10.1%. I know all of this stuff gets you politically charged, Rich. Just let me come to you with this first. Bring us up to speed on your views and your thoughts.
Well, we've already spoken about national minimum wage of these three. I think it will be later than expected this year. Obviously, we got the earlier announcement with the voluntary living wage, but that was always expected. But they've got to set a rate, I guess, firstly, that's realistic against inflation, but then also not set a rate that is inflation that will be unworkable fiscally. I think also there was always the plan, and it has another one of these government plans for the last 10 years, that it would hit medium salary or percentage of medium salary by next year, 24-25. So there are already paths in place for areas like that, and there is already plans in place as to what it has to reach. So I think it's 1033 off the top of my head by 24-25. So do they stick or do they twist? Do they consider that this is a singular inflationary period? They've also got to look at obviously the state pension on exactly the same, because remember they got rid of the standard format of the free options for this year. Are they going to have to do that again? So changing the pension. So there's a lot of things in that area. I think, because it's been such a positive webinar, we might as well carry on as we went on. I think we have I know. Can't we talk about something happy?
What a roll.
It's Friday. Happy. The cost of living and inflation, I think we've all got to dig in. Does anybody see an end to it in the next 6 months or so? Obviously, our friends in Europe or Eastern Europe have probably a plan that certainly isn't going to end soon, and I'm not really going to talk about that area anymore. So realistically, if we're on our way back down in 6 months, I think that would probably be a result. But I think we've got to be girding ourselves for the long haul on this one, more because it's so controlled by so many other areas other than what we can do. So if you think about the fuel cost, suddenly puts up everything else, and that everything else then hits everything. So there are so many integral parts within the process of inflation, probably more than ever, because one is in turn hitting another one, is hitting another one, is hitting another one, that I think sadly we've got to be ready for a fair period of time as we are. And it's so volatile. We all got quite excited a couple of weeks ago when petrol went down again. So my diesel went down to the 170s, and that was hallelujah. And I go to Tesco the next day and it's back up to 185 again. So I think there is so much volatility in the markets, and that again is strengthening the resolve of seeing any change in the short term.
Yeah, I think one thing that the whole payroll community can understand is we've seen just how much the furlough impacted, the UK, and the amount of payments gone out there. Everything's got to be repaid for, and we're in for a little bit of tightening the belts for a little bit longer going forward, I think, and that's probably going to be here to stay. It's just how we manage it, and having a solid policy, hopefully, that we can all rely upon, that isn't going to change. Just knowing what we're doing is half the battle, I think, and then we can prepare ourselves.
But I think Jeremy Hunt did the right thing, because given that we are teetering on the edge of, for a lot of people, real issues,
Yeah.
The continual escalation of interest rates, for instance, if that was allowed to occur, it's not a good story. So we need fiscal stability.
I had a quick question on our third topic here, which is national minimum wage imminency. I'm going to go back to you here, Simon. Thank you for a great overview there, Richard. It says the HMRC have taken a tougher stance on national minimum wage breaches over the last few years. Do you think the rules are clear to employers? And is the level of HMRC enforcement fair?
On the latter one, I think that's subjective and depends on the behavior of the employer. I think lots of people are being caught by technical breaches. Some of that is because we don't understand the subject, and some of that is more accidental. But there are a number of challenges around national minimum wage, but increasingly it's they've got a point to prove because they're under threat, aren't they? So there's going to be this new single enforcement body that's created at some point that may well take the activity away. So they've got to justify the job. But the other aspect is some employers are a bit unscrupulous out there or don't really understand it. But I think it's becoming tougher. So they are getting strict in various interpretation, but we don't understand the principle of minimum wage. And living wage doesn't clarify it either. So I'm talking about the voluntary living wage, because the voluntary living wage is about the rate of pay you pay. Yeah. If you then salary sacrificed half of that, you're not in breach of the voluntary living wage because the start point was right. With national minimum wage, national living wage, it's about what you get. So it's what happens in the end that becomes critical, not what you get to start with. And I think still we've got a lot of employers in the mindset that it's about the hourly rate, and it's not. It's about what you get and how long you've worked.
And we have tackled this in previous PQT episodes. So do check back on previous episodes. Go to the Payroll podcast. You can listen to this. We've tackled this in quite a lot of detail as well. So do check there. I'm conscious of time, Richard. So I'm going to say a huge thank you and cut you off in your last comment to say thank you for joining us today. You've been a fantastic guest. Thank you, Simon, as well. And thank you, all of you, for joining us on today's PQT. Please join us for the next one before you run away. It's on the 25th of November. Registration will open soon at the usual site, sdworks.co.uk/PQT. Thank you to all of you. Have a wonderful wet weekend, and we look forward to bringing you the next PQT real soon. Thank you.
Thank you very much. Enjoy the rest of your day.